Just wrapped up the first week of May's trading, and in today's video I'm going to be breaking down all of the trades that I took with my private community, and that way you guys can see exactly what it's like to take trade alerts, hop on live sessions, and really just learn what a typical week of mentorship under me looks like. So we're going to be going over multiple trades. We took a total of 4 different setups, a couple wins, a couple losses. So you're going to see the real authentic way that we actually trade, all the good, all the bad, all the ugly, and ultimately how we ended up coming out on top in profit to finish strong. So let's get straight into the charts and go over the first setup of the week, which was on Monday. Now, if you're new to the channel and you don't understand or don't know exactly what I do with my personal trading, I specialize in something called NAS 100, also known as NQ if you trade futures. And essentially what this is going to be technology stocks such as Nvidia, Amazon, Microsoft, Apple, etc. And I've been trading for the past 7 years, started back in September of 2018, and I've dabbled with forex pairs, commodities like gold and silver, cryptos, you name it. But ultimately I just love day trading NASDAQ just because of the way that we get aggressive moves in the market and how we can trade for really just a couple hours a day in the morning, in and out with profits and wrapping up my day. So we're going to be breaking down the week of May 5th all the way to May 9th, and we're going to be starting off with Monday's trade. Now, my style of trading really consists of a couple of key elements such as fair value gaps, liquidity, and understanding the importance of timing during different trading sessions that help me determine where I'm expecting the market to go for the day. And the first thing I'm looking at for my analysis is really understanding on Monday what type of trend were we in heading into the new week. And so we see NASDAQ was in a uptrend bullish market. So I'm focused on buys off the get-go. And the second thing I was looking at was fair value gap. So we saw that we had this fair value gap that formed from Friday, and so extending that out into Monday, this is a zone where I know the market will gravitate towards. So we did see the market move towards this area, and then I expect reactions from it, especially if I'm expecting the market to go bullish or to continue upward. I know that this retracement into this fair value gap should lead into some pushes upward. Dropping down to a smaller time frame, now I start to really pay attention to the session timing. So one important element of my trading is understanding this red shaded box right here, which is called the Asian range. And essentially what I like to do is mark the highs and lows of that session so that we can understand, where price is going to want to go for the day. Because typically around Asian range, where price really slows down and there's not a lot of volatility, the market will typically like to get to that area and either fake out or break out from those zones. So we can see that we had price during London session start to really test those lows, but really not have any true movement below it. All we really did was kind of sit around at that low level, test it a few times, and then ultimately start shifting upwards. So at this point, if you notice, we have multiple confirmations or confluence for why we want to get into a buy opportunity for NAS on Monday. So essentially, again, we wait for New York sessions to start roughly at around 8 a.m. Eastern. But really what I like to look for the most is for setups after 9:30 a.m. Eastern, which is the New York Stock Exchange opening price time. And so you'll see that with this yellow line that is marked out through the whole session here. And so price opens at 9:30. Ends up manipulating up and down a few times, which is very typical to do at around that open price time. And so basically an hour and a half after we saw all of this back and forth action, we saw a failure for price to really continue below the yellow line and also fail to really stay below Asian range as well. So if we're failing to stay below those two key price points, then for me, it's like, where am I going to take price next? And that's where the concept of liquidity comes down. So whenever you have Asian range, this red shaded box, you're going to have price usually like to test one direction very aggressively and push through it. But if we start to see that price kind of sits around, let's say at the low, and it starts to reject from it, many times we are going to go and seek the liquidity or basically reach this price point. So now I have a clear target in mind of where we can take this trade from down here to. And so once we rejected away from these two price points, I ended up taking a buy entry at around a clean price number of 20,000 on NASDAQ, right around here. And I used a 700 pip stop loss, so a pretty decent size stop loss. I don't really like micro scalp NASDAQ or anything. We use pretty sizable stop losses, typically between 500 to 1,000 pips, just depending on whether we're looking to swing the setup or whatever the case may be. And then obviously we're looking to target a new high in the market. If I expect the market to continue bullish, we're going to be looking to target up here for about a 2.5 hour plus trade. Ultimately, I set my final targets usually at 4-to-1 risk to reward ratios if we can get there. But as the trade plays out, we will, manage that accordingly if price starts to turn around on us, which we can see obviously in hindsight now how price did turn around, but we were able to secure some profits. Now, on our private mentorship program called Akashex, I do call out all of these trade alerts. So we're going to go back here and start off with this trade right here. So 5 days ago, we're recording this on Saturday, May 10th. So 5 days ago, we saw this move entering off of 20,000, stop loss at 19,930. We see the entry price, stop loss, TP levels, and everything here. So all of my students are not just able to learn from what I'm looking at, but also being able to jump into the same trades that I am taking. So again, we ended up jumping in at 20,000 and we hit TP2, which is roughly a 1-to-1 risk to reward ratio here. So basically, if I risk 1% of my account, we're making 1% here, which obviously is not a huge trade, but at the end of the day, if you can secure even a 1R trade for the day, there's nothing wrong with that. As many times as we can stack up wins, whether they're big or small, it is a win in the books, right? So what I really like to do in these situations too is, structure, start to maintain as we start to move in higher. And so once we hit over a 1-to-1 risk to reward ratio, I typically like to, be very conservative with making sure that I at least secure that for the day. So if price starts to continue, perfect, we'll continue to hold that trade. But the minute that we really start to see some major pullbacks, as we started seeing here where price started breaking below these lows, I was content with taking my W, closing out profits right here and exiting the trade. So for me, this was a 1% gain for the day, 700 pips collected on this setup, and then we just move on from there. Now heading into setup number 2, this was a trade that honestly really wasn't trading too according to my trading plan. And we'll see what that ended up costing us. The good thing was I did let all of the students know on this second setup that this was gonna be a really like a type of trade that wasn't my super highest probability or one of my signature style trades. So not to use the same typical risk we usually would on a normal setup. We wanna use maybe half the risk, kind of keep things light. But I ended up going for buys here at 19,950 heading into Asia. Again, I don't typically like to trade during Asia at all. But my whole thought process was that after sweeping these lows and maintaining New York open price, even heading into the new trading day, I figured that we would just eventually get to this bias that I had of pushing above these high points. Basically, this being the low that expanded, retraced, and then created a new expansion. That was my thought process here. For this trade, ended up being completely wrong on this trade, of course. We saw price barely start moving up before eventually we just came crashing down and hit stops on this trade. So very simple explanation for that one. It's a trade that we probably should not take in general at all. This is why I like to trade during New York session, and there was no need to get fancy, and lesson learned there. And this is just to show you that even with experience, sometimes you can find yourself in situations where you think you see a setup worth taking, and then in hindsight you're like, yeah, this is exactly why I create a system and stick to the system as much as possible, because there are certain setups like this that are just pretty much trash. And the good thing is we did use a much smaller risk than we typically would, just because we knew we weren't really sticking to the original plans of trading during New York session and the exact confirmations that I looked for. So really not that much harm, no foul here on this specific trade, but we're gonna go ahead and of course count this as a loss. So we have 1 win, 1 loss for the week, and then we move on to the remainder of that day. So heading into the next day on Tuesday, we had a bit of an interesting way that price developed. It was actually a very confusing day for me of what price was really trying to do. So if we kind of take this back and we look at the 3 key points that I'm looking for in price, right? We have the Asia high of Tuesday right here. We have the Asia low of Tuesday here. And then we have that New York Stock Exchange opening price at 930 down here. Now, typically for my strategy, I like to look for price to interact around these price points, to look for entries. And of course, the real ideal place we could have maybe gotten in for some entries would be around this New York open price. Now, I have a lot of students in Europe that did take the breakout of this low right here during London session. So that was obviously a very clean trade, but I'm sleeping during that time, so I'm not really ever taking positions during London personally. So really what I like to see, if we do escape the range and kind of head right back into it later in the New York session, I usually like to go for buy opportunities, as price really should stay below this price point if we're going to continue pushing, to the downside. If price revisits this price point many times, that's kind of the early indication that we're going to end up blowing past it and really heading towards the Asia high liquidity. Same thing we kind of saw on Monday, right? Testing the low, ended up coming back above it to go and take the liquidity from Asia high. So again, during London, we already saw price move very aggressively below. New York Stock Exchange opens, we end up rallying back up into the range. Now, for this trade, I ended up looking for price to basically test that low point a couple of times and then really give me that confirmation that I'm looking for, that we're ready to break above. So for me, that was this exact candle right here. So essentially, price, tested once, came down, tested twice, came down, and then we started ripping through a third time. So if I test twice and then push through again many times, I'm always going to be very comfortable with seeing that as a great confirmation for me to go in and get in on some buys here. So we can see that was this trade alert right here, entering at 19,850 price point, crossing back above the high point. And so we're going to go ahead and place the buy here at 19,850. And we can see that we were slightly in profit from the get-go. I felt that we really had a decent stop loss here, just basically covering all of these low points that basically held price up during these rejections. So again, many times out of 10, I'm always going to really trust that setup right there. And unfortunately, we see that we went slightly in profit. Price basically tried testing back up above that point. I thought really right here, we were good to go. To be quite honest with you, I'm like, okay, now we're finally breaking. And of course, we ended up crashing right back down. And this is one of the realities of trading as well, which is there are times where you're going to see this setup that we hit stops right at this candle, and then we pop right back up into profit. Now, for me personally, I ended up taking the stop loss here. And as soon as we started pushing very aggressively back above our entry point, I ended up re-entering and making back that loss on this trade. However, for the sake of this video and really, what the average student maybe would have done in this situation is just take the loss and really not know what to do. So we're just going to count this as the second loss of the week with this right here. And of course, these hurt more than, let's say, the prior trade where we're just completely wrong, right? In this situation, we had the directional bias, right. It's just the exact stop loss point was just not enough to really hold for price to then blow up the way it did. This was due to some bond news that we had. I believe right here, 10-year bond auction ended up coming through, had that little liquidity grab and shoot up. So again, personally, I ended up breaking even on this setup, but we did have a loss there for the team. So we are now with 1 win, 2 losses. Even though the other loss was meant to be a smaller loss, well, even if we continue to call it a regular loss, we're basically 1 win, 2 L's to start the week, 2 trading days in. Okay, so at this point, I'm waiting to see what ends up happening with price. We saw price basically reject right back below. And then later in the session, we started seeing price basically recover back into the entry zone that I was looking for in the first place. So at this point, again, my directional bias was really strong for me where, again, I know my strategy. If we break below and we start to test this point again, it's because we're going to end up ripping through. And until we take out that Asia high, I just don't feel like the job is done for the day of what price is trying to tell us it wants to do. So I ended up calling out another trade alert here to really get back at this setup. I ended up jumping in at 19,860, same 500 pip stop right here. And this was a trade that basically kind of sat around. So we activate here, end up coming back lower. And after some thinking, basically after we sat around for a little bit, my mind was like, you know what? I'm going to exit my position here with a break even / small win here. Really just a break even trade because I just don't like the way that price has really behaved in general during this whole session. And I'm really looking for an explosive move back above. And we're just still kind of, pushing up and down, kind of, whipsawing through that price point. So I ended up clipping the trade break even. Again, if we look at the notes of that specific trade, I said, hey guys, closing break even at entry price. Price is behaving erratic for me to want to continue. So I ended up clipping the trade. No harm, no foul. I think some people maybe squeezed out like 200 pips out of it, which is really not a lot. But again, for me, I consider this a break-even trade. So far, 2 days into the trading week, it's just very rocky. We started off well, ended up having an unnecessary loss that we probably shouldn't have taken that trade whatsoever. Ended up getting another trade here where we basically got, you know, wicked out by a hair, and then price ended up moving into our profit. So just really like a weird start to the week. Couple losses, a break even, and one okay win. And then we move on to the next trading day. So something that is important to note is that, you know, whenever you start to trade for yourself, or, you know, start to really not depend on alerts or you know, other people to help you find setups, you have to be very mentally strong when things aren't going your way, especially to start the week, because at the end of the day, the worst thing that happens is that you self-sabotage, because, you know, you start getting in your own head about, you know, does my strategy work? You know, what's wrong with me? Why am I not seeing what the market's trying to tell me, etc., etc. But a big part for me of trading, and, you know, I think any professional over time understands that you want to have setups that not are just high probability, of course, but that give you a great risk to reward ratio that can help you recover losses with just a few wins. So I don't necessarily need to have a super high win rate of, you know, 80-90% to feel that I can handle trading. I think as long as you can win at least anywhere from 50 to 60% of your trades, and obviously there's many traders that even have, you know, lower win rates than that are still profitable. I just feel like if you can at least win half or a little bit more than half of your trades, you can be in a great spot. And so we're going to see how that continues to play out through the week, because right now we're basically in the red, right? We have 1 win, 2 L's, and 1 break even. So next trade comes around Wednesday, and we have FOMC. So FOMC, 1 p.m., 1:30 Central. This is 2 p.m. Eastern, 2:30 p.m. Eastern for the press conference and the announcements here. And so during London session, again, we see that price ended up breaking out of Asia. Some people, again, from Europe on my squad ended up taking some setups through there. I obviously, again, am not taking setups during London. And then here we have 9:30 opening price. And at 9:30, we start to return into the range. Now, many times, again, as we saw on the prior days, whenever we do test that low point after breaking through it, we typically end up shooting above it. And I forgot to mention, if we really look back, at 6 p.m., we ended up having the market open and rally 3,000 pips, basically hitting the targets that I was looking for earlier in the day. But the way that this happened was just super weird. I mean, we had a day where we broke through, ended up chopping back and forth, and then at 6 p.m. you have a 3,000 pip candle. It's just a super weird Tuesday, honestly. But this candle really summed up how weird of a day it was for me. But again, getting back to Wednesday, I typically do not like to look at my strategy as break and retest, where we're breaking below, retesting, and selling off again. There are certain times where, again, we can see here, it works out, right? Price breaks here, retests, and continues. I don't like to do that typically because, again, if we see price break through this point and end up dropping, if we revisit it later, then we could end up seeing price, again, push the other direction. So for me, seeing this pull back up into here, my thought process actually was, okay, well, if price starts to really clear back above here, then we'll look for buy opportunities and, again, take out Asia's high. Basically the same thing we already saw the last 2 days. However, once we did get back up right into the Asia low, we saw price reject very aggressively and break and close right back below this low point. So now, again, I have to adjust what I'm looking at. And this is an important thing, especially as day trading goes. You know, you're going to have a certain bias maybe heading into the day. And then as price starts to really develop, especially after 9:30, you kind of have to be able to think on the fly and make some changes to where we can expect price to go. So again, thought process is, you know, heading into the day, we should be seeing price stay below here. Price does stay below here. However, we miss it because it happens early during London. So already we already got a kind of a curveball. Then price returns back to the range. So now we're looking for buys. Price does not end up breaking above and actually ends up closing lower. So now I'm shifting my bias back to sells. And so at that point, I'm like, okay, where can we look for a trade here? Because at this point, I didn't think we'd revisit Asia once again. I figured, you know what, I'm going to use my third reference point, which is New York Stock Exchange opening price, to look for potential entries here. And again, for me, it was just understanding the order flow. If we had price push up, come down, push up, come down, we're basically in a downtrending market. So we're going to have pullbacks. And if we can get a pullback and respect this high, which also happens to be Asia, then we should be able to continue lower. And we had some clear targets in mind. If I zoom out here for just a sec, there was this price point of 19,660, where essentially we had these equal lows that formed here. So again, liquidity concept is huge for me, right? Where are the stop losses? Where's the money sitting at in the market? We had a lot of buyers holding up price from this 19,660 level. So eventually, if price is coming lower, this is going to be a very, sensitive area for price to want to get to again, basically grab that liquidity from those lows. And so again, kind of jumping back to the smaller time frames, understanding that 19,660 was a price point to pay attention to. If we're looking for sales, that is going to be our primary target. And then anything really below that will just be extra that we can allow the trade to run towards. But that would be my main priority, is getting price to get to there. So 15-minute time frame, ended up seeing on this pullback as well that we had this fair value gap on the 15-minute time frame here. Essentially, we had that massive candle that sold off here. So we're going to mark off this fair value gap again from this 15-minute really strong candle where there was no buyers whatsoever in here, just a straight sell-off. So typically, whenever we see those huge fair value gaps or imbalances, we'll look to see price basically fill, some of it, ideally, half of that fair value gap. And so the halfway point just happens to be right around that New York Stock Exchange opening price. So at this point, we have a lot of confluence with the trade. We have price showing that we are in a bearish order flow, price is breaking lower. We have our key point of Asia broken below. We have New York Stock Exchange opening price here sitting within the fair value gap. And then we have the clear targets down here of where that resting liquidity is. So from that point, it's just executing the sell position and trusting the process. So we ended up getting in at 19,820. I used a 700 pip stop loss again here just to kind of, get very close to this high point, where if we really hit that high point in Asia, we're really just out of the trade. There's just really no reason for price to get up there if we're really going to see price get to where we want it to go. And again, we can see the trade alert right here. NAS 19,820 is the entry price, stop loss 19,890, and then the different TPs. So 19,820 right here, 19,890 right here. So 19,820, 19,890. And then again, our main priority was getting to these equal lows for a little bit over a 2.3 to 1 R. Personally, my TP4 was a 3 to 1 R. And that's actually exactly where I ended up closing out the trade. So we look at the smaller time frames as we head into those targets. Again, price came up into it, ended up rejecting and pushing lower. And really after we hit about a 1-to-1 risk to reward ratio, roughly around here, is where I tell people like, hey guys, let's move our stop loss to break even. So our original stop loss up here, after we go 700 pips in profit, we go ahead and slide that to our entry right here. So we did have some pullbacks after we hit a 1-to-1. We saw price, hit the 1-to-1, pull back a little bit, and then eventually end up crashing through. And FOMC was important because that was really the catalyst at 2 p.m. right here for price to really start to bring in that volatility that kind of helped our trade continue to push into our targets. Now, again, the minute that we broke through that liquidity level and then we started seeing price start to, reject and start to wick away from this area, I ended up clipping the trade there, closing out profits, which was good because eventually we saw that price ended up shifting the other way for the rest of the day. So this is basically the last trade that we ended up taking for the week. So we ended up taking a total of about 4 different setups. We had the win on Monday. We had a loss basically later in the day heading into Tuesday. And then on Tuesday, we actually had getting wicked out by a hair and then breaking even. And then Wednesday, we ended up having a nice 3-to-1 risk to reward trade. So personally, you know, I made my money back again on that weird trade from when we got wicked out on Tuesday. So I made a little bit more profit, but assuming you're just a student that, you know, just, you know, following the signals or whatever the case may be, then this was still an okay week. You still made about 2% profit, depending how you want to call it, incorporating a small win, couple of losses, a break even, and then a really decent win right here. Now, Thursday, Friday, there were extra opportunities that were not called out on the app or anything, so I don't even count those really, just because obviously I want to be able to document every single trade that we take as a community. But again, my strategy really is something that activates and plays out basically every single day, Monday through Friday. So you are able to day trade and find multiple opportunities every single week. Sometimes even every day you're able to find a couple setups. I'm a firm believer that you don't have to trade every day or really trade so much if the setups are not really that clean to you. Because again, people always look at taking more setups, meaning making more money, which is true, but you're also risking more every time you jump into the market. So anytime we jump in, we want to try to have a clear reason as to why we're getting in and where we can target price that makes sense. So again, by no stretch of the imagination is this a killer week, an amazing week, but this is the reality of trading. Not every single week is going to be a huge win, but if we're able to make some type of profit overall for the community, if we're able to win just as many trades as we lose with the risk to reward ratios carrying us through into profit, that's ultimately what trading is about, especially when you look at this from a weekly, monthly, and yearly time frame. And you look at trading as something that you do for an extended period of time, right? Not just for a season of, oh, I'm going to try it for a couple days, a week, a couple months. This is something that really likes to show the results and your edge and what you know about the markets over a longer period of time. So again, these are 4 trades we ended up taking this week. All of them called out on our private mentorship. All of them were able to be taken by our students. We had multiple students ended up getting funded stage 1, stage 2, getting payouts, all type of different results in the community. So if you're interested in learning directly from me, taking my trade alerts and plugging into our weekly live sessions, links in the description for you guys to get started with our private mentorship program called AkashX today. Also, we have massive promos going on with our partners at TradexMastery, where you're able to secure some funding right now for Mother's Day. You got about a day and a half left to take advantage of 60% off all of your funded challenges, guys. So I do want to thank you for watching today's video. I hope that you guys found some massive value in the setups and the weekly recap. If you guys want to see more of these weekly recaps, go ahead and drop in the comment section. Yes, we want to see more weekly recaps, and I will definitely be pumping those out to you guys here on YouTube. But with that said, make sure to like, comment, subscribe, turn on those post notifications for any future videos so you don't miss out. And with that said, guys, let's run it up.